I think we'll take another minute. I think quite a few people have joined. Then we can start. Hi, a very good evening to one and all. Let me start with my own introduction. Since this is an exclusive session for Allsec clients, uh, many of you already know me. However, for all others, my name is Vrushabh. I head the compliance business for Allsec and I'm based out of Bangalore. It gives me immense pleasure to host this session and I would like to welcome you all. With me today, we have two speakers, our esteemed clients who have seen Allsec journey from earlier co-chief to Allsec and now Quest. I'm sure you got the communication. I'm sure many of you have interacted with Mr. Madhu Dhamodaran. In his current role, he heads the legal and compliance for entire Quest Corporation. He's a well-known figure in the labor fraternity and has been an ardent preacher of this subject. He has been part of various seminars in the recent past. I'm sure you might have heard him in other forums as well. He's also a key mentor for Allsec compliance business. I welcome you, Madhu, and thanks for your time. I would also like to wish and introduce Mr. Udaiyakumar Jain. Many of you who know Uday, I'm sure that you have interacted with him for legal support queries. In his current role, he leads the legal division within the Allsec compliance operations ambit. It's he and his team of lawyers who are the backbone of these operations. In fact, they are the ones who kind of constantly research on this subject of labor compliance and ensure all abreast with the recent happenings. And they are the one who send you the Allsec smart snippets. You might receive those email alerts coming from Allsec. So that's our primary tool for passing on all the recent updates under the labor laws. And one of reason we are hosting all of this, we have been getting a lot of requests from our existing clients that we are sharing a lot of information on the snippets, but why can't we get into much detailed session and to understand this topic? So not wasting much of time, let me set the context here. The session here today, we will split into three different segments. One would be I would request Madhu sir to kind of give you the current insight. A lot of questions have been asked in media. I'm sure you're reading all of that. A lot of confusion. So I would like Madhu sir to give us current status of this entire. What's the current situation? He will add some his valuable words. And the second, we will have Uday run through not as crisp, but not as detailed as well, keeping time frame in mind to run through you what are the impacts, what kind of changes we all are going to see, and what kind of preparedness is required from an organization standpoint. That those three critical questions which our clients have been asking. So we have covered all of these three in this session today. And lastly, in the invite email, we have shared certain questions and thanks. Many of you have responded to certain questions. We will take some of those. And also the live chat window is open. Any questions which you would feel can be asked during the session, please feel free to drop a text there and we'll pick it up from there. Madhu sir, please, once again, a warm welcome and all yours.
Thank you, Vrushabh and the Allsec team for having me here. And thanks for almost 187 attendees here. I'm hoping all of them are clients, and then thanks for all of you to be part of this webinar. And Vrushabh was expecting me to give an exact update. It's not that I have much update. yes, I do interact with through the organizations like CII and ISF with some of the stakeholders to understand where we are. But I want to share what if you have been following on this, what is the latest, right? And you might have already seen them on the newspapers already. There is as we speak, there is a conference of labor secretaries and labor ministers happening at Tirupati. I think today, this morning, it was inaugurated by the Prime Minister himself. And the word is that the discussion is about labor code and then how each state is prepared and then how quickly they can go how prepared each state is and then they can go live with the code. So that's the news. So which is if considering the kind of no news at all, except for the newspapers speculating towards every quarter end and then saying from tomorrow onwards your salaries will be lower or all kind of things that it didn't matter any news organization, whether it is the reputed ones or the ones online, all of them were carrying such news, and then that is where we sent all of us into TC as to what is happening. Uh, from such a situation that we are now looking at or talking about or hearing that there is a very organized meeting happening about this. So I think it is a sign that government is now seriously thinking of going ahead and implementing them. To add is also the fact that I don't know how many of you noticed the related news item where many of the industry organizations were again met with by the labor minister himself, and also he has met all the big trade unions in the run up to this conference at Tirupati. I can vouch for CIA was quoted on the newspapers as well. So there is a team of the chairman of IR committee himself and along with a couple of others have gone and met the minister and then again reiterated some of our concerns as well as giving him a message that industry is ready to go ahead and they should quickly roll out the implement the labor codes. You would also seen some of the reporting regarding what the unions have taken. Obviously, you've seen, but one good positive sign I will take is that even BMS, which used to be which is the, where they from a political perspective stand, they also used to oppose it, but you would have noticed there is a positive statement from them. At least two codes they don't have an issue, and namely labor code, I mean wages and social security, they don't have issue to go ahead with, which is very different from some of the statements which have come from the same spokesperson or the president of that union. So overall, that all this means I think government is now moving. But then if you ask me when do you think it is going to come, I'm not sure, because there are still quite a few work to be done. Leave the states and they need to finalize their rules. Even center's rules are only in draft stage. They have done all the consultation process of the tripartite and all of that stuff, conferences and that. But central government by itself has to be ready with, for example, national floor wages. What I hear is that the committee appointed there is still deliberating and they have to come up with their report and then they have to be accepted. Probably they will go for a stakeholder consultation again on that. So that is one thing which is pending. If you really want code on wages to go live, without that it's not possible. And similarly, so that's one. Second is with regards to, for example, if you take a CLRA, this thing, the code, so organization OSH code proposes a drastically new way of regulating contract labor without involving the principal employer, with no need of him to have a registration. So those kind of things need every single state government functioning effectively with their online kind of licensing portal, etc. So I'm not sure how much, probably this seminar or this conference of ministers and labor secretaries happening is also deliberating on that. So those kind of preparedness is very critical, and without that going ahead and implementing can cause problems. Or they can, so the other way is instead of going all of them at once, they might go code by code They might, just because I'm saying don't think that that is what is happening. I'm saying that is an option available before the government, central government. But I've been on deliberations in tripartite conferences where the state government representatives were there. They were all not willing, or they were not aligned with that thought process. They were saying if you're going ahead with that, then they need to implement all the four codes together. So I'm just speculating. So that is also possible. And if they decide, it is also possible to go section by section, because for all of that, the respective section 3 of the respective codes enables the government to notify accordingly. So to all in all, I don't want to take much of time. Where we are, if you ask me, are we going to get this implemented? It looks like there is a positive momentum towards it. And questions as to, I'm not deliberately not touched upon what is going to happen with wages, gratuity, grandfathering, etc., because we really don't know. Probably CII delegation, when they met, they have reiterated that concern of the industry with regards to the cost going up with regards to wage definition and its impact on particularly gratuity and leave encashment. Will the government, as the government accepted, as what is the government's thought process on it? We don't know yet. Overall, considering almost except the newspapers know the talk was happening, now we are really looking at Prime Minister himself is initiating a conference of labor ministers and labor officials of the states, and probably with agenda, only agenda being labor code. We should expect some announcement as to implementation, how, by when, etc. Hopefully, we'll wait for further details. With this, I'm handing over to Uday, and he is just kind of focusing on, these are multiple webinars of our own Allsec itself we have conducted. We have gone through code by code earlier, but he's just kind of refreshing our memory, and then there are a few questions. We will take it up. Thank you.
Thanks, Madhu. Thanks for that. So, hi everyone. Good evening. So today we will touch upon where we are standing on codes, as Madhu has given a brief about where we are and what's happening in the background, and have given his insights. Practically again, what we see, or where are the states and other things we will see today. The central government has been very candid enough to keep on stating that they want to go for implementation of all these four codes only once all the states are ready with the rules and they want to go jointly. Having said that, whether that is a rule or rule by what they want need to follow, the answer is no. If major states have already done with the state rules, then they can go ahead and implement. And in that way, where are we standing today? If you see, for code on wages, which subsumes four different legislation, though it was the first code which was notified in August 8, 2019. Today, out of total 36 states and UTs together, we are yet to have five states and UT to notify the draft rules. And every time when I say there is certain states or UTs to notify draft rules, there is a period again for after notifying the draft rules. They need to give ample time to deliberate it with the unions and employer representatives, and then post that only they will finalize it out. So today, with regard to code on wages, there are 5 states still pending. After that, all the 3 different codes like Social Security Code, OSH code, or IR code have been notified in September 2020, a year later. And in Social Security, we have still 10 states pending in with regard to notifying the draft rules. Similarly, for OSH code, we have 13 states still to pending, and IR code we have around 9 states pending. And if you see, most of them are UTs and other things, but one state or a couple of states which have not completely notified is, one being a major state which is considered is West Bengal. Then some northeastern states like Meghalaya and Sikkim and all are still pending to notify it out. That's where we are today. And as I state, acts which have been subsumed. So code on wages have subsumed around 4 different legislations which are related, typically for related to wage related issues, like your code on wages subsumes payment of Bonus Act, Payment of Wages Act, Minimum Wages Act, and the Equal Remuneration Act, which deals with the wage as the major category. Similarly, for Social Security, you have 9 acts which have been subsumed, like your ESI, PF, then BOCW, CES Act, and Unorganized Sector Workers Act, and other acts. Similarly, for OSH, one of the major Service Condition Act which is got subsumed is the Factories Act, and CLRA Act and the Interstate Migrant Workers Act. These are the major acts which may have a bigger impact for establishments which we have today. Apart from that, there are other acts like Mines Act and again our Cine Workers Act and other things. But yes, comparative to our clientele, what we see is for these legislations which are getting impacted, and Sales Promotion Act for sure, yes. And coming on to IR code subsumes only 3 legislations which are Trade Union Act, and then Industrial Disputes Act, and the Industrial Employment Standing Orders Act. Moving on. To the next this thing. So what are the differences which are created or coming by these labor reforms has to be kind of seen. So these labor reforms, the one major thing why we are all talking today is for the reason that the definition of wage has been completely changed by the new legislation. So what happens now, unlike our olden S12 legislations, which had different recognition or consideration for wages, and it was been treated, or for reason it has been taken differently by a lot of people. Now we have something, a universal legislation, a universal definition here. And under the new regime, under the new definition, the wage has been kind of bifurcated into 3 different elements, what we can say. One being the inclusion portion, then second being the exclusion portion, then third being the proviso attached to it. So under the new labor code, the coverage for included wages is wider. Rather, what you can say is anything which cannot fit into an excluded portion of the wage will be construed to be under the included portion of the wage. And when it comes to the exclusion portion of the wage, they say that there are very specific components which can be excluded, like it is your statutory bonus, it is your HRA, it is a amount paid to defray your special expenses, then PF contribution by the employer, conveyance and the LTA. All these things are coming under the exclusion portion. And the proviso, the third element of the definition, states that the exclusion portion cumulatively cannot exceed either 50% or any percentage which is notified by the central government under the total remuneration. So say suppose today you have 10,000 as your salary, your exclusion portion like your conveyance, your bonus or PF contribution, all should fit within 50% of the total remuneration, and it should not exceed beyond 50%. So 5,000, within 5,000 it should be there. That is the whole agenda or whole concept of the new wage code. Now, how does this change? There has been a lot of questions which has been coming from the clients, that how this wage will impact us. That is what we are going to talk about today. Moving on to the next. So second point of that reforms which is coming, key changes is coming, is who is a worker and who is an employee. Earlier we had a lot of ambiguity around who would be a worker or who is a employee or a non-worker rather. It has been more clarified under the new regime. They have stated that anyone who is a employee who has supervisory power and earns a salary above 15,000 will not be a worker. And second, any employee who has an administrative and managerial power will not be a worker. Except these two, all others would be treated to be a worker. So In simple terms, say suppose today, even if I earn, whether the salary is a criteria for it. Yes, salary is also a criteria, but salary alone is not a criteria. Say suppose today an employee who is earning 1 lakh rupees as salary, but does not have a supervisory power or doesn't hold any managerial powers, who is an individual contributor, will be considered to be a worker. But at the same time, a person who is earning 20,000 salary, but who has a supervisory power or has a managerial power, will not be a worker. So that difference has to be understood. So what an employer needs to know is that who and all will fall into an employee category and who and all will fall under worker category and who and all will fall under non-worker category. Why such categorization or identification of workforce is required? For the reason that there are a lot of benefits and compliances which is related or to be extended only for the worker category of workforce and not applicable for employees. So if you see the OSH code, it speaks all benefits or all service conditions related to the worker. And if you see for IR code, it is for again for worker. Rather for other two codes like code on wages and social security code speaks larger about the entire population of employees and worker category. That identification is required for an employer to do who and all will fall and what kind of benefits needs to be extended to them and whether we are extending the same. Then similarly for employer. So if you see for employer definition, again under the new definition, the contractors are also included under the definition of employer. Now what will that bring a difference? Unlike the S12 legislation or S12 situation and the old regime, contractors, without including the contractors, principal employers cannot be made liable to do the compliances or cannot be penalized for the any contribution of a contractor, leaving a contractor. Earlier that was there. Now since the contractor is also made employer and he is vicariously liable to that, now he will be made jointly and severally to part of the proceedings. He has to be made as a party. Without doing that, an employer alone cannot be, a principal employer alone cannot be made to party to a proceeding. That's the point here. And coming to definition of industry, now unlike the old ambiguities were earlier ambiguities were there, whether industry includes IT sector, whether industry is purely only for manufacturing segment, whether industries include shops and establishment and others. These ambiguities have been done away with. Now the coverage definition of industry has been widened enough and it applies to almost all the sectors. You be an ITS company, you be a retail industry, you be a manufacturing unit, every industries are now covered under the definition of industry. And by that, what happens? Any industrial dispute becomes applicable to all segment of establishments, and everywhere where it is treated to be an industrial establishment in nature, it may have a linkage to your establishment as well. That's the point here. Similarly, there is a new concept of fixed term employment which is introduced, and whether this fixed term employment was there earlier or not, fixed term employment was brought even prior to the courts and under the Standing Orders Act, but certain states have gone ahead and adopted it, but certain states have not adopted it. Karnataka is one of the state, they have adopted fixed term employment, and it has been made changes in the rules as well, but yes, certain states have not that. But having said that, fixed term employment was never been prohibited under any state. So any employer can always hire a fixed term employment even prior to the code or amendment of Standing Orders Act. Having said that, the benefits attached to fixed term employment like proration of gratuity and all was not there earlier. That came only post the amendment, and the new code now makes it mandatory whenever you hire an employee under fixed term, when you prefix a tenure of an employee at the time of appointment for a certain period, post completion of 1 year, his gratuity has to be prorated and provided. And what is the benefit for an employer to hire employees at fixed term is that at the time of expiring of the contract of fixed term, there is no retrenchment compensations to be paid if you retrench an employee who is under fixed term. That's one of the benefit what they have. By all other means, fixed term employee will be treated at par to a regular employee itself. And under the new regime, you can find there are a lot of reduction or truncation of compliance burden. Lot of returns registers have been integrated with one another. Having said that, the ingredients to be captured there are still being the same or being added, but yes, yeah, electronic maintenance of the registers and other things have been encouraged under the new regime. That's one of the changes which has been brought. Moving on. So if you see under code on wages, what are the changes which has been brought under code on wages is one is the new definition of wage, which we spoke at the first. Then applicability of ceiling limit. So if you see earlier under Payment of Wages Act, we had something called as a ceiling limit or a threshold of 24,000. Any employee who is earning a wage up to 24,000 were covered under the Payment of Wages Act. Now that ceiling limit has been taken away. Now Payment of Wages Act applies to all employees, and by that what compliance changes will come, you need to maintain register of fines, deductions and advances, everything for all this entire employee crowd. Similarly, the payment date which were applicable only for a selected crowd of employees of either 7th of succeeding month or 10th of succeeding month will now apply for the entire population of the employees. That is one of the changes which has been brought. Similarly, now there is a new mode of payment of wage and timelines which has been prescribed under the new regime. Electronic mode, and also they have given for consideration for your payment wallet or other beam you pay, whatever you say, even a wage can be paid through those kind of modes, and that will be considered to be a proper mode of wage transfer under the new regime. Similarly, earlier there were two timelines for payment of wages. For any establishment which is having 1,000 or lesser employees, they can make the wages before 7th of succeeding month, and any establishment which is having 1,000 or more employees, they can pay it at the 10th of succeeding month. But now the 10th date has been removed off. Now it is only 7th of the succeeding month. So all establishments are required to ensure that they make the payment for the previous wage period before 7th day of the succeeding month. That's one of the key change what they have done. Fixation of capping of allowed deductions. Earlier there were two cap limits. One was 50%, and for cooperative societies it was 75%. Now they have done away with 75% for the cooperative societies. Now the allowed deductions in a wage period cannot be done above 50%. So maximum 50% is the deductions which can be allowed in a wage period for all employees in all type of establishments. Then similarly, wage settlements on termination. Earlier, if you see under the Payment of Wages Act, for the employees who were covered under Payment of Wages Act, for them, in case of involuntary exit, for termination, dismissal and retrenchment cases, an employer was required to make the wage settlement, full and final settlement, within 2 days from his last working day. Now, under the new regime, it is also for the resigned employees. Now, what kind of change this will bring? One is that the crowd of employee or the coverable employees are all. It is not limited to employees who are below 24 or 24,000 wage limit. So all employees who are resigning will fall under the coverage of Payment of Wages Act. So what will happen now? Any employee who resigns from an establishment from his last working day, within 2 working days, you have to settle their full and final settlement. And when we speak about full and final settlement, does that include gratuity and other retirals? No. The answer is only limited to your salary components and leave encashments. These are to be treated as a wages, and those wage components has to be settled within 2 working days for all the employees, even for a resigned employees. Coming to social security code, now the social security code, earlier we had a different wage definition or wage consideration under social security. Social security code subsumes your ESI and the PF Act. So if you see earlier for PF, we had something called as basic plus DA. Then the Surya Roshni judgment came. They said what components needs to be considered for employees who are below 15K and other aspects and all. But for ESI, it was a different treatment altogether. ESI, we used to consider the gross wages, and again post 2019 we had a different judgment which stated conveyance and LTA not to be included for ESI consideration. So gross minus conveyance was treated to be a ESI wage. Now there is only one wage definition, universal wage definition for all the 4 codes. So the new definition will apply for all the 4 codes, and
I think we lost you. Are you facing any challenge? Just text.
sorry, I think there was a disconnect. Yeah. So under the new regime, wage will be treated as per the new definition for all purposes, be it for social security or code on wages or for all aspects. So that is the difference. Similarly, ESA coverage is now going to extend for all 744 districts pan India, and it is not currently we are at 455 districts, I guess, and now it is being getting extended to 744 districts across the nation. And coverage of new category of informal employments. India is the first nation which is going have recognized the informal employment like gig workers and platform workers for a social security scheme. Even in Western countries, they have gone ahead and given a recognition as an employees or employment recognition has been given to these kind of gig workers. But India, we had come out with a midway where we are giving only social security benefits to these kind of gig workers and platform workers. Yeah. Now, going ahead, there is an increase in penalty amount for contravention of laws. It has gone multifold for all courts. But having said that, the penalties have been though increased to a higher level and gone multifold. The threat of imprisonment for any first time offenders or first contraventions have been kind of lifted, and it has been made compoundable offenses. So you can pay the penalties and get away with these kind of first time contraventions, which has been appreciated by all the employees or the establishments. That's one thing which has been appreciated. Then moving on to industrial relations code. The new in the IR code have made fixed term employment has been formalized, and for all kind of sectors, all establishments can now hire fixed term employment subject to the condition that they extend the gratuity and other benefits which has been prescribed for the fixed term employees under the new model. Similarly, timeline for raising industrial disputes have been kind of enhanced from 2 to 3 years. That has been made. And definition of employee worker, as we discussed, it has been clarified and made more there is no ambiguity, rather they have been made more clear on those subjects, who could be a worker and who could not be treated to be a non-worker. That has been clarified. Standing orders applicability has been increased from 100 to 300. So first, the industry definition includes all sectors. Now all establishments are required to take standing orders subject to the condition that they have more than 300 or more workers in their establishment. It is only workers, not employees, 300 or more workers. And it applies even for IT, ITS and other segments as well. So that has been made. And this threshold limit of 300 cannot be reduced by the state governments. It is with the central government who can either can only increase the threshold limit of 300. They cannot reduce it until unless there is an amendment. So any establishment now which is having a standing order and who are not having 300 workers may also have an option to get away with the applicability or coverage of standing order post implementation of the labor code. That is also possible under the new regime. Then another thing is there is a new reskilling fund which has been introduced. Whenever an employee is being retrenched, along with the retrenchment compensation and notice period pay, now the employer is also obligated to pay 15 days of his salary towards the reskilling fund to a prescribed board by every state. So it is if you see for retrenchment compensation, it is 15 days for every year of completion for an worker. But when it comes to reskilling fund, it is only 115 days of salary which is being paid to the reskilling board, and reskilling board will again paid back to the worker for his skill development and other aspects. That is the purpose of the reskilling fund. So that may create a obligation to an employer wherever there is a retrenchment or attrition rate being higher. Moving on to OSH code. OSH code, if you see now, OSH code kind of does not apply to all, or whether it applies to all is a question which we usually get from all our clients. So the repealing legislations needs to be seen when it comes to OSH code. OSH code on a general note applies to all establishments, be it shops and establishment or be it factories and other sectors as well. And the coverage is more. Any establishment which is having 10 or more workers have to go ahead and get registration under OSH code. And as Madhu stated, under CLRA, there is a provision for provision which has been lifted for registration of principal employer. So for principal employees and all now not required to get a separate registration certificate under CLRA under the new regime. But any establishment having 10 or more workers have to go ahead and take a OSH registration. And once OSH registration is taken, that will be linked to your CLRA licenses and other aspects. And that is how it is going to work, what we hear. And but OSH code also speaks about certain other service condition related provisions like your leave encashment, leave accruals and other aspects. When it comes to those kind of provisions, it is very specific to certain legislation itself. So factories and other establishments. When it comes to shops and establishment, your state specific shops and establishment act will still continue to prevail and govern your service conditions until unless in sync to OSH code any surgical change is not been made on your leave accrual or leave encashment kind of provisions. That may not have an impact for a shops and establishment kind of situations. That is how it is going to work. Then there is a provision to single registration for an establishment under OSH code. We are not sure how that is going to work in future, for the reason that state government is going to be the appropriate authority for a lot of establishments, and until unless lot of states doesn't get into an integrated mode, whether is it possible for one establishment having multiple presence to take one single registration is kind of a questionable position now. We need to kind of wait and watch there. Then appointment letter is being made mandatory. So every establishment, every employer, be it for a casual employment or a temporary work, whatever it is, need to ensure that they issue appointment letters to the uh, workers who are being engaged. So it could be through your contractor or it could be even directly by you, but an issuance of appointment letter is made mandatory. Similarly, modification of definition of contract labor has been made. So now the contract labor also includes your interstate migrant workers and who are earning a wage up to 18,000. So interstate migrant worker would be someone who is earning up to 18,000 of wage and who is not from a similar state where he is working. So he is from a domicile of a different state and his work destination state is different. And if at all he is earning a wage below 18,000, then he will be treated to be an interstate migrant worker. And for those kind of interstate migrant workers, you need to extend additional benefits like his journey allowance and other things have to be taken care of. Now, allowing women workers in night shifts are also allowed under the Factories Act. Earlier, Shops and Establishment Act still has a prohibition, but you can take an exemption. But Factories Act under Section 66, it was a prohibition. Now that has been struck off by Madras High Court, and hence this provision has been amended in the new Labour Code as well. But to take to engage a woman at night shift, you need to take her consent, and for no reason you can dismiss or discharge a women worker for refusing to work at a night shift. That is disallowed completely. Then additional clarity has been provided for core and non-core activities. So it has been earlier also this was there under Section 10 of the Contract Labor Act. Now it has been made more clear that contract workers cannot be engaged under a core activity of an establishment until unless you get a prior permission with the appropriate authority. And they have also classified 11 items of non-core activities like your sanitary, security and other transport workers and all. So that has also been brought and clarified. Moving on. So what next an employer needs to kind of take care of? Now we have seen what and all are the changes which is coming, or what is the things which are in front of us. Now what as an employer we need to do? That is the other point or other questions what we keep on getting from our clients. Moving on to. So employers need to kind of be prepared for implementation of labor code. Madhu have given a clear picture when it could come or where we are heading to it, right? So almost all states have done, and it is quite expected or likely to come very shortly. So employer need to be prepared for the implementation of labor code. So what they need to understand is the changes which is going to come under the new regime, and whether we are currently the establishment or the employees are currently having the understanding of that, and what needs to be made, or whether it needs to be a policy level change, or whether it needs to be a any monetary changes or monetary impacts are coming. All those things have to be ascertained. So what could be that? So if for say suppose a definition of wage is playing a major role here. So whether we are in line to what the new definition is there, whether are we paying the salaries as per the new wage, whether our salary structure or the pay what we pay, whether that inclusion portion is above 50%, all those things have to be seen. And there has been a lot of questions which has been coming to us always asking that whether we need to enhance our basic to 50%, whether we need to keep it above 50% as this thing. The labor code does not, the statute does not mandate or obligate any employer to do a restructuring altogether. They do not even say what, rather it's a statement, direct statement, which states that whatever may be your components, you pay it under basic, you pay it under other elements, you pay it under whatever. So we will consider this portion of the salary to be under exclusions and remaining to be inclusion. And this is what we'll treat as a deemed wage. That's the direct statement. It's we, the employers, who kind of go ahead and revisit our existing structures to ensure that we mitigate the risk of being a more cash outflow going either for a PF front or be it for a ESI front or our retirals or leave encashments. It's we who are seeing that our existing structure, how it could impact under the new regime and what could be a mitigating methodology. That's the reason why people are looking around for a restructuring model. That's the major point of a monetary band. Similarly, as we stated in the new regime, there is something called as a reskilling fund, which has been introduced. Again, there has been a lot of other changes which has been brought under the threshold limits under OSH code have been changed. Factories limitation for having a creche or be it for a canteen or welfare officer, all these things have been changed. So we need to see on the compliance front what and all have changed, who and all will fall under a worker or a non-worker category. All these things have to be changed, looked upon. So every employer is required to kind of involve, be it your finance team or be it your HR operations team or your procurement team or your team which handles your contractors. Everything people needs to kind of engage, see what kind of impact it is going to bring. Please analyze it and see what it could bring, and make a proper employee communication, because employees are also again will be restless to know how their wage or how their salaries are going to impact, whether their salary take home is going to get reduced. All these questions will be there under the to the employee's mind as well. So that also you need to ensure that you do a proper employee communication, give them proper knowledge sharings on this, give some highlights on what is coming around and what could impact them. So that is the second things. But do not implement any of it, any of the changes or any of the things what you're seeing before the implementation of labor codes. We also get a lot of questions. So we'll go ahead and proactively increase our salary to 50%, basic to 50%, and we will be compliant. Whether that is going to help you out, then those kind of proactive steps are also not recommended, for the reason that if at all tomorrow for any reason there is the exclusion limits are being enhanced. So from 50, if it has been said that 60% or 70% could be the exclusion limits, then your current structure may not even require a restructuring model. And if you'd have gone ahead and proactively extended any kind of benefit to an employee, that cannot be also pulled back. So those kind of proactive steps are also not recommended until the implementation happens. We do not suggest it to any of our clients to go ahead and do the implementation. Please be with the crowd, cross the bridge when it comes. That's the advice what we have been giving for most of our clients. Moving on. So there are certain employer liabilities which everyone have to, liabilities or duties, what we can say we need to do or be for ready for with the preparedness. Do your financial analysis, share your payroll files with your people or advisors whomever you are engaging with. So do a financial analysis and evaluate what could be a retirement outflow, what could be your leave encashment outflow, what could be your PF outflow or ESI outflow. Please look into that. Along with that, there are also other aspects. These are all the direct financial impacts. What you can say, there are some indirect monetary or financial impacts which could come by way of overtime liabilities, or again from reskilling liabilities, or for factories where there is a annual medical checkups have been prescribed for those kind of for people around above 45. So those kind of things also need to be analyzed. You need to identify how many people are there in your factory above 45 who may qualify to have this kind of annual medical checkups to be done, and what could be a cost to that. And by way of the new regime of new definition of interstate migrant worker. Interstate migrant worker, earlier it was only for employees who we go to a different state and enter into an agreement of employment or engagement and bring the worker to a different state to make or discharge their services, we're falling under the coverage of interstate migrant worker. But under the new regime, that's not the case. Under the new regime, the definition states that even any worker who comes by his own will from his domicile state to a different destination state at his own will for a search of job, then he will also be qualified to be an interstate migrant worker, subject to the condition that he is earning up to 18,000 salary. So what will happen? Any entry level employee who be it even at an ITS company, if he is an entry level employee who doesn't have any supervisory control, he's at a minimum wage of 16,000 or 17,000, he will qualify to be a interstate migrant worker. And what you need to ensure that at the time of budgeting or hiring or taking your recruitment approvals and other things, you need to ensure that you are also factoring these kind of additional benefits what your is required under the new regime for journey allowance and other things also need to be taken care, and you need to take approvals. So those kind of things have to be seen. Assess your retirement and leave liabilities. Then compensation structure options, whether see whether your existing compensation structure has to be restructured, and whether by restructuring you can gain or you can save more costs on the retirals or other contributions. Please explore those options. Then overtime liabilities, as I stated, please assess those who are all falling into worker category and who and all the employees who will fall under overtime category. Please ensure that if there is a people who are working above the workers, then how many workers are being take a trend out of your previous salary payroll files, how many people you have given overtime, and going forward how much it could happen. Those kind of assessment is required. Again, estimate your other financial liabilities which may arise out of compliance obligations like your medical checkup, canteen facilities, retrenchment and all. Then do a proper classification of who is a workman and non-workman and extend the benefits accordingly. But having said that, there are establishments who do not want to diversify or categorize someone as a worker or non-worker. Still go ahead and give certain benefits to all the employees crowd. So those kind of harmonized approach is also not prohibited. So that can be still revisit your SOPs, your comp and bend part. So for be it for interstate migrant workers or for other larger crowd as well, see what are all benefits which you extend may fall under the remuneration concept. What are the compensation package what you pay, whether the percentage is meeting the 50% concept or not. That please relook into it. Ascertain your liabilities towards the informal engagement, be it your gig worker or casual worker. See how many employees or what kind of engagements you have with your consultants or certain temporary workers or any through your contractors, whether someone will fall under the gig workers or platform workers model, and whether you could become an aggregator to that. Then there would be a liability for you to contribute towards their social security as well. So that's the thing what you need to kind of ensure or you need to kind of see ahead. Moving on. Then review your policies, existing policies. Please review your existing policies, recruitment policies. If you do not call for any of an employee's domicile details, please do. That may be a requirement for you to identify your employees interstate migrant worker element. Similarly, appraisal and wage fixation also you need to kind of look into, for the reason that now under the new regime, the Equal Remuneration Act does not specify only to the opposite gender of female, rather it has been made more gender specific, and it also includes the third gender. So under for any gender you cannot have a differential treatment. So ensure that it has been made proper and equivalent for all the genders. So that's the reason. Then revisit your employees' salary deduction norms, because earlier you might have been deducting salaries for the allowed deductions or other things only for a particular crowd of 24,000 and below salary earning employees. Now it has been made for all employees. So for higher earning employees, I know for reason lot of establishments could not restrict or limit the deductions at 50%. There are instances where they deduct beyond 50%. So please ensure that it has been streamlined. And issuance of, again, appointment letters, ensure that for your direct engagements or through the contractors, all the appointment letters are given. And for women employment and shift engagement, ensure that the state norms and safety features have been kind of adopted appropriately and been extended. And take the consent letters. The major issue is take a consent letter. Without a consent letter, now you cannot engage in women employee in a night shift. So ensure that for all these things you have the SOPs in place. Mapping of appropriate employees, as I stated, certain benefits are extended only to the worker category and not for non-worker categories. So identification and mapping of your proper workforce to worker and non-worker is required. Revisit your leave encashment norms. For factories, please revisit the leave encashment norms. For shops and establishment, there may not be a major change until it has been brought by way of a S&D Act. But for factories, yes, the repealing legislation is now under the OSH code, and there is an annual leave encashment which has been introduced under the new model. So you need to ensure that your leave encashments is not going to be only on the time of exit, rather it is going to be annual for whichever cannot be accrued beyond the threshold limit. Similarly, revisit the engagement of contractors as per the new regime. If at all you are engaging anyone at a core activity, now that may not be possible. Please ensure that you avail prior permission by the appropriate authority who can permit you to engage contractors at a core activity for certain reasons. Revisit your principal employer obligations. So if you see, principal employer obligations have not been lifted under the new regime. It still continues your supervision or monitoring over the salary disbursement for contract workers and other things. But yes, under the new regime, there has been a lot of other facilities which has been made for a principal employer to monitor the contract workers compliances. Like your PF has been EPF has been time and again encouraging the establishments to go ahead and map their contract workers under the PF portal. But it is, as of now, it is an optional model, but under the new codes, that's going to be a mandatory one where you have to map all your contractors under that, and you have to ensure that their complaints are done. For any non-compliance of a contractor, the liability is still going to be on the principal employer, but the contractor is also going to be made joint and severally liable. That's the point. Moving on. So ensure that under the new regime, you are ensuring all the compliances are there in place. Make a proper list of what are the existing compliances, what you have, and what are the new requirements under the new regime have to be checked across. There might be a lot of transition from various acts getting, or returns and registers and all getting integrated. You may feel lost there. Please take a proper advice. See what are the additional obligations. Please list it down and ensure that you are doing all that, and the cost attached to it, please ensure that these costs are there, be it your canteen facility or checkups and other things. Please ensure that all these costs are also being taken care of. Then prepared for the change under the new regime and policies and all. Please keep it updated and ensure that everything is in place, but don't go ahead and publish it or effect it out until the codes have been implemented. Once the date of appointment of codes have been implemented, then you go ahead and do the implementation. But be prepared under each and every aspect. So be it your policy version controls, be it your checklist, or be it your cost impact analysis, everything, please keep it ready, but do it once it goes for implementation. And ensure that all employees have been given, you periodically interact with your employees to get more concerns from their side, what could be an implementation impact on take home salary or their service conditions and all. Please try to address those things and keep on having a proper communication with employees and engage them, so that there is no chaos at the time of implementation from the employees front. Again, have a proper third party vendor or expert, take a support of them and do a proper transition. Probably the experts will help you out in these kind of transition aspects. That's from my side. I think we can go ahead and take questions.
Thanks, Uday and Madhu sir, on valuable insights. I think personally for me, it has been like a classroom refresher session. A lot of things I think many of us have gone through, but it was a great refresher. Thanks so much. But what we'll do is right now we have very limited queries in the FAQ section. Sorry, rather in the what is being published in the chat box. But what we had done is when we had shared the invite, we had sent you a form, and there we have quite a few questions which have been asked. So what I will do, I will take that. Some of those very interesting ones I would like to pick, and some of them are very basic as well. We can start with those. Just a moment. Madhu, I would like to take should first set of questions to you. And again, this is very, very basic, but we have been seeing it in the media news every few days. The very common punchline or tagline which Uday also used is be ready for reduction in salary. And that's where the majority of the buzz is getting created. So that's one primary. While Uday covered it as to how is the take home getting impacted, we would want to know your views as well. I hope I was audible.
Yeah, thanks. So with regards to this, see, these are all speculation. See, the gratuity, if gratuity is part of your CTC, then yes, with the liability going up, because without going to much details, but we all know now, the basic being your basic, that is the whatever the employer was paying as basic being the only thing added for calculating gratuity. Now it will be 50% of your total. Let's say in general, this could vary depending upon your structure. So there is a possibility of that going up. So if the employer were to kind of convert that into a CTC, there is a possibility. And same might be, but then there are instances in large scale. For example, in Quest, we have so many employees in that borderline between minimum wages and 15,000. When you simulate the impact of the definition of wages, in fact, the contribution comes down, so the take home can go up. So it's become kind of fashionable to say you are getting impacted, but it is all depending upon each employer and the employee and how the salary is structured. And like Uday suggested, and then we have also advised many clients where there is an opportunity to reorganize a very skewed pay structure and then bring in elements of wages which are in the excluded part of the wage definition, and then you will be able to reduce such impact as well. And then, for example, if you're paying PF on all your basic, not capping at 15,000, the employer can take the decision now to cap it to the capped wages, right? So it's not a universal truth that the CTC has to come down. It has to be it has to be worked out at the employer level, probably at the employer at each category of or each level of employees as well. Yes, there is likely to be an impact, but it all depends on how the current salary structure, readiness of the employer to make a few changes in being ready for the courts. Back to you.
Thanks, Madhu. So one quick question always again comes because majority of of our clients are on payroll, and there are some certain sets of non-payroll clients as well. One common question in preparedness they always generally ask is on the exit. If an employee is exiting, what is the time frame the new law brings in terms of when do we pay their wages, and what kind of preparedness is there required on the payroll front as well and on a legality perspective.
Right. So yeah. So again, here this timeline of 2 days is only given in code on wages and in the OSH code, and it talks about leave encashment. So only on these two, so code on wages means only the wages part of it, right? Which is could be your basic, etc., etc. Whatever is payable, let's say normally we are all on a monthly basis. So somebody is resigned during this thing and this last date is on a particular date. What is payable from a basic, those components of wages is what is payable within 2 days. And now, like Uday has already clarified, you are today when we say F&F, we consider leave encashment, we consider gratuity and all of that. Probably we need to kind of split that to be in compliance here. But having said that, is it even to clear wages? There are difficulties because you might have given assets to the employee, you might have given huge advances to the employee, and even if you had given notices, probably they are not settled, and there is recovery with the employee. So there it may not be possible for you to complete this within 2 working days. Only thing I can say is probably that will evolve, because there is a possibility to interpret saying that if you have given an advance, so it's almost like that the employee is sitting with the money, so it's almost like settled. It is settled. So there is a possibility. But then if it is an asset, for example, a mobile phone or a laptop that you've given, is it possible to interpret this? I'm just telling you a possibility. You need, each employer has to check this with their own lawyers and then find their audit, etc., so that they put policies in place and this is in conformity. And the value of the asset is more than, let's say, the amount due to him from a purely wages perspective. Can we still say that till he is not settled, till he is not returned the asset, returned his advances? Can we say that if by keeping it is already settled? It's a proposition. It's all possible. So those interpretations are going to come into play, because it's practically impossible for an employer, like any employer who is spread across the country, to kind of settle this within 2 days of last day. But having said that, one of the preparation that every employer need to make is it possible to do this? Is it possible to tweak the processes in place and ensure at least what is to be paid to him? Let's say 10 days of wages, etc. Can, with the notice available, can we not be ready for those to be paid within 2 days? Is also another exercise every employer need to take to be prepared to be in compliance with this provision. Back to you. You're on mute, Vrushabh.
Sorry, thanks, Madhu. I think that answers very well. I would like to pick a couple of very interesting ones. I think, Uday, this is for you, but I know a lot of people hound you with this. One, many of you are all aware that, especially in the state of Haryana now, when we apply for Contract Labour Act registration and amendments and all, we have been asked to kind of apply for the industrial standing order, and there is definitely a mention in the codes where the threshold is being increased. What question always crops up, that is this 300 figure for the establishment as a whole in the state, or is it an establishment or a office premise wise headcount? So Uday, if you can throw some light on this.
See, under the legislation, establishment is only a single unit. So you how you take for a shops and establishment RC also you take for every separate establishment in the state, you take differently, right? So it is per unit or per establishment license wise is what has been considered. Having said that, if the certifying officer if the certifying for standing orders, it is on the certifying officer. The certifying officer has a power to certify the standing order under his jurisdiction in a combo manner. So if at all under one JLC, there are 3 units. For all the 3 units, you can take one standing order and order for all the 3 units. But if the jurisdiction of certifying officers are different, then you are obligated to take different. That may not apply.
Okay. Thank you. I think there's one follow-up question, and again, this is from the chat box here, and I can clearly see. I'm assuming that should be an ITS company, but if a company generally, in the standing orders, we have to define the role profiles into permanent and contractor, and related to labor codes, and in the current context, if we have an individual contributor role, but what he's actually performing on the floor might be a bit a supervisory role or a vice versa situation. So what would be your advice and how do we define those kind of roles in this new alignment?
See, usually it is not for being qualifying to be a workman or a non-workman. It is not on the designation what you tag to an employee. It is rather it's the nature of job what he discharges towards the establishment. So whether if that is on a supervisory role and that could be established before the authorities, then he could come out of a worker category. But having said that, if you are not in a position to establish his nature of job being a supervisory or administrative role, then obviously he will fall into a worker category. That is how it is. It is not on the designation what we tag into. You even tag a designation of AVP copier in charge, and person nature of the job of a person is only to take a Xerox and give one floor office attendee job. Obviously, he will be still tagged as a worker only. So that is how it will be.
So,
Yeah,
Madhu.
Madhu.
So the while the worker definition has become clear and who is a worker, who's not a worker, it is still a lot of things are going to be debated, whether with the labor officers on an inspection or in a dispute raised by the employee saying that I am a worker, I'm eligible for OT, I'm eligible for leave encashment and all of that, or because the labor enforcement pursues an employer in the court to dispute the employer's argument saying that these are all workers. So there's going to be a lot of interesting case laws emerging from here. So to that extent, it's going to be confusing. That's why Ujay was saying one of the preparation you need to do is that do we know among our every single employer has to ask this question, do we among our employees who could be likely to be worker, and don't do this analysis just because he's drawing a salary or his designation is fancy and therefore I have given him a designation supervisor, so he is a supervisor, is not a worker, or I have given a designation as manager and therefore he is a manager, is not a worker, or I have given him some tasks to kind of go through. I'm just giving this particular sentence is a reference to the latest decision in Chennai with regards to one of the IT companies, whether this particular person is a worker or not under the current laws, right? And there the court has very clearly gone into the aspect there is some supervision done, but that's not his main job. So these are the things that every employer should really identify with each and every role and then be very clear whether he is a worker or not, and then analyze the impact based on overtime for leave encashment, etc., because that's going to play a very critical role. So we now, for example, in a finance or accounts role, we always assume somebody who's sitting and working through the or burns the midnight oil during year-end closure and all of that stuff. We assume they are all not workers, but that need not be, is what I'm saying. I'm just giving you one example. It can be a IT person who's coding. There are both ways you can argue. While coding, he has to take a lot of independent calls, so he's not a mere worker. He is performing an administrative kind of task. It's possible. Whether the courts will agree or not is something we need to wait and see. So for every employer being prepared for implementation of the code, identifying which are the roles which are the employees who will be workers or not is going to be very critical. Back to you.
Okay, One quick thing, Madhu, I think this is a follow-up with what you have mentioned. While you clearly explain what kind of profiles we need to plan, there is one question again posed in this chat box is regarding will there be an industry classification applicability of the standing orders clearly defined? Like there's one client which has posted, I am an edtech company and I'm into education. Will it be applicable for me or there is specific guidelines for me on the standing orders?
So if you look at the with the IR code draft rule the central government has published, and in the IR code it is very clear only the central government can come up with the model standing orders. So they have published 3 model standing orders, one for services sector, one for manufacturing, and one for mining. So whatever is not manufacturing, mining will come under service sector. So it doesn't matter whether you're a tech company, etc. If you are an employer, if you are doing an industry as per the definition, then you become an employer. If you are an employer and then if you have more than, I think it is 300 is the threshold, then you need to have a standing order. And then that standing order, you can adopt the model standing order or you should have one. Is very simple. So there is no confusion as to I am from EdTech, so it's not applicable. I don't think that's going to happen at all. It will be very, very simple. Anything other than mining and manufacturing will be services, and any that model standing order which is for services can be adopted by any such employer.
Thanks, Madhu. Just a second, I'm browsing some more and Uday, one thing which I think I would like to shoot it out to you with regards to is there any specific call out for international workers in any of that and what kind of preparedness we would require? There are a couple of questions on that, but I'm just trying to mix that up and answer the question, a very straightforward question. For international workers, do we need some specific preparedness? We are already facing a lot of issues in terms of Provident Fund, we are all aware, but anything else, any call out has been made?
No, see, for be it for Provident Fund and for specifically for international worker is called out only under PF Act, and no other act recognizes any other international worker and a domestic worker in a differential manner. Only under PF Act there is this consideration has been given, and your existing PF scheme and legislation and ESA and all is still going to continue for another 1 year from the date of implementation of the new Social Security Code until they come with a new social security schemes altogether. So there is a 1 year perpetuity clause which is there, and by that your existing schemes will continue. Your ceiling limit until not changed, the concept of ceiling limit and capped wages will continue. International worker definition, there is no bigger change. So all these things will still continue to go for another 1 year. And I don't think there is a different separate preparedness what you require for when it comes to an international worker aspect there.
Not right. Thanks for that. There is one more question. I'm not sure why this is being asked, but I am allowed to read it out. It's anonymous, but thanks for the session. This is very helpful. My question is about the leave encashment. Is it really mandatory to encash the eligible leaves to employees at the time of leaving or at the time of exit? There could have been more context to this, but Uday, want to take it up?
Yeah, so leave, when it comes to leave encashment, is the 2 different legislations. One is your respective Shops and Establishment Act, and second is the Factories Act. If you see, except for Telangana, there is no other state which mandates the employer to encash leaves during service. All Shops and Establishment Act states only at the time of exit to be given. So what it states is that leave accrual is one threshold limit, but whatever leave you allow for an employee to accrue, that has to be encashed at his living. And again, there is a debate on whether it has to be done on basic or gross wages. You have to purely go by the definition of wage, which is stated in the Shops and Establishment Act, and that has to be encashed. That is what it is. And you cannot have a threshold for encashment. There is no threshold on encashment. If you see every legislation under Shops and Establishment, the threshold is always on the accrual. So if you can put a threshold on accrual limits, but you cannot put a threshold on encashment. Both are 2 different provisions altogether. You once you allow an employee to accrue, whatever accrued has to be encashed at the time of exit. Except in Telangana, they state that you can encash 8 days of leave every year during service itself. That is the only difference. Factories, again, it's on exit. It is on an average wage which is you have earned, and based on that you have to encash, even treat for the leaves. That is what it is.
Got it. Thanks, Uday. Madhu, there's one or rather three questions in the FAQs, but I want to touch base on that's a very interesting one, which and all three are common. What are the benefits as an organization I may derive if I adopt this fixed term employment? This is commonly asked. And is there any minimum term period, 3 months, 4 months? Is it anything which has been outlined?
No, so let's finish the second part of it. So the in fact, surprisingly, the provisions with regard to FTE is very simple and kind of without any restriction. All that it says is who's an FTE, and when it says who's an FTE, all that it says is that the term should be fixed. Nowhere there are only two codes in which it is defined, one is the Social Security Code and the Industrial Relations Code. And in both the codes in the definition, it doesn't talk about what is this fixed period should be. Okay, so there is no restriction. You can have a 6-year contract and then say it is a fixed term. I don't see a problem in this. Tomorrow those things can be questioned. If you give a fixed 6-year contract, how do you think it is a fixed term? And isn't it that you have a perpetual requirement for the employee? Those are all for interpretation. Tomorrow an employee can take you to court. You might have a person for 6-year contract. 6th year you wanted, you saying no, by a flex of time your contract is expired, so I'm not going to pay you retrenchment compensation because you are an FTE. When that person takes you to court, court might look at it differently and then say this is not the intent of the law, but it is only for the shorter period of time. Right. But I'm just giving it in law as it is written, and when it gets implemented, if there is no amendment, there is no restriction on the period. The second one, and then is there a restriction on how many of my total workforce can be FTEs? There is no restriction on that as well. In fact, I was part of some of the deliberations when CII was having discussions with the unions, and then it was a joint effort by unions and some employer organizations to make this amendment in the model standing orders in 2017. All the proposals from the industry had this concept of limit on number of total workforce, etc. But government said that is, if you do that, then it will be, to monitor that will be difficult. It will be left to the industry and the respective employee representatives. So they have carried on the same thing. Having said that, is it going to tomorrow? Can I kind of convert all my 100% of the people into FTEs? You will have to take your own call, because if finally somebody is going to take you to court. And they either the authority themselves or one of the employees is going to dispute saying it's not an FTE, it's a permanent work I was supposed to do. And courts are free to look at what are the facts and circumstances, and then they might interpret saying that no, this is you have used the provision, but this is actually a full-time role into which you have put this thing to just to take advantage of hire and fire kind of a thing, right? So this is what I've been advocating in any of the industry forums, and whenever I speak, I think industry has to be pretty careful with this. And then therefore, let's come to what are the benefits of FTE. So FTE is giving all employers and one more additional type of employee to give you flexibility. When I say what is the rational approach an employer has to, so you need to have a policy around FTE, which can be any short-term requirement I will fill through an FTE. What is short-term could be industry specific, right? For a call center, when they are doing, we are losing you for audio. You guys are not able to hear me?
Yeah, we lost you for some time. I don't know.
No, you're audible. You're audible.
Yeah.
Okay. So what is in a particular industry short term? Probably it will go by industry. I'm just giving a very random. I was discussing this with one of the clients in ITS. So you are migrating a process for one big client, and then that process requires an expertise. just during the migration phase. For 3 months, you need an expert, and then you are taking him for a fixed term. It can even be for 1 year, it can be considered and approved. Tomorrow courts also might approve that as a fixed term requirement, right? Like that, you need to come up with a guideline and do that. If okay, I've got the freedom now, I will convert entire 100% of my workforce into fixed term, is not going to, I don't think that's fair. And also if it gets to the code, you will lose badly. So benefit of fixed term is it gives you one more type of employment. We already have your full-time employment, we have the contract workforce, and then you have the now the FTE. That might give you an opportunity to kind of get yourself a flexibility depending upon the type of work you do, type of industry you are in.
Got it, Madhu. And there's one more interesting question which I just read. Sorry, I missed it, but Uday, this is related to one point which you made, and there's some cost associated for compliance here. Okay, and this cost may be considerable because they talk about annual health checkup for employees or workmen. So I would want you to provide some clarity there. Is it going to be applicable for all set of employees? Is it going to apply all across industries? There is a specific question on this.
No, under the rules, it has been clarified that it is only for BOCW mines and factories and people who are at hazardous worker, and for a employee, not for employees, rather it is for workers who are 45 years and above. For them, an annual health checkup has been made mandatory. So we need to kind of, from the total crowd, we need to identify how many such people may be eligible for those kind of benefits, and we need to extend to them. So that's the reason I stated that identification of this kind of workforce and category of employees who require these kind of benefits to be extended have to be identified. And for them, it has to be extended. Those costs have to be taken care of.
Okay. One quick related to this one itself, where there can be again a cost impact. I'm specifically bringing this because I'm sure there'll be a lot of queries further on this. It is on the guidance on the grievance redressal committee. Whether we have to constitute and what are the guidelines which the labor courts are bringing up.
Now, see, GRC earlier people were not taking or did not constitute any GRC for the reason that they thought that it is not applicable for all kind of industries, because the nature of the definition of industry under the ID Act that created some ambiguity. Now the definition of industry extends to all kind of sector and all establishments, and by that any establishment having 20 or more workers have to constitute a GRC. And the GRC needs to be equivalent for employer and employee representatives needs to be equivalent and not to exceed the members about earlier it was 6, now it is 10. So the maximum numbers of GRC members can be only 10. And where there are women employees, women workers who are there engaged, there needs to be a proportionate number of women workers also to be there under the GRC. And the GRC presiding officer have to be kind of on a rotational basis. This year, if it is from the employer side, then the next year it needs to be from the employee side. Every year it has to be on a rotational basis, and any member cannot hold the position beyond 2 years. Every 2 years there needs to be a change in the GRC members as well. So that is the GRC member constitution aspect of it. Other procedures are the GRC, how you treat a case, and then within 30 days you need to kind of close the grievance, and if not satisfied, then the worker or the union representatives can go and appeal to the conciliatory office, and other things are attached to it. So that is the point.
Okay. So I think we are inching close to time, but I think Madhu has to say something.
I think Madhu.
Yes, so I think more than what needs to, how it is constituted, I think the industry's question is, do I need to constitute at all? Because I'm an ITS company and I already have structures to take care of harassment and grievances, and therefore do I need to constitute? The answer is it's a legal requirement. You need to have a GRC. Once the code comes into place, IR code is implemented, even an IT/ITES company will need to have a GRC. Now, the next question that comes is then that will mean employee representatives. So are we bringing in unions or in an indirect way and all of that stuff? It all then this needs to be managed. So in fact, I remember an interesting conversation with one of the additional labor commissioners. And when I was part of a seminar with him, then he is very clearly, one same question came up. He said, if you have your systems, which meets all the GRC requirements, then which includes the employees as well, because if you don't have employee representation, then that's not a GRC as per the law. Okay, so I think that is one preparation. I'm not sure all companies are doing now. To us, there is an assumption that which is a requirement of all industry associations, where employers are such employers who already have effective processes for handling grievances should be given exemption. I'm not sure that exemption is coming. Okay, so I think industry needs to be prepared for it. They need to delve deep into what are the implications of this. How do they ensure that GRC will be constituted? And it doesn't mean that just because you constitute a GRC and you have an employee representative, immediately unions will come in. I think even otherwise it is possible to constitute, and then there are processes given in the rules as well. So I think industry needs to kind of think through this carefully, and then how do they ensure there is a GRC. If it is not there, if you get caught because of a complaint by an employee or because during an inspection you were asked and you are not able to fulfill, the consequences can be quite heavy, because in IR code the penalties are quite high. They can go up to 10 lakhs, 15 lakhs. Of course, 15 lakhs are all for unfair labor practice, but it can lead to minimum 2 lakhs, 3 lakhs easily. Okay, so I think industry needs to be a little careful with that.
Correct. I think we have surpassed the time, Madhu, but thanks so much for that. I take one last question and request all to stay tuned. This is very important because this is something which is buzzing in the media, local newspapers and all of that, the new jargon, moonlighting. I think I spoke to you, Madhu, on this, and while the labor codes also is bringing something similar, we are going to recognize gig workers or platform-based workers. How is this concept going to kind of change the way we work? We would like your thoughts, Madhu.
See, there are two things we get. Okay, there is this. There is one moonlighting. Moonlighting is never allowed, right? You have very specific provisions in Shops and Commercial Establishment and Factories Act, which clearly says if the employer is aware that person is working in another person, then you should not be. Then you should not be given the. It is depending upon number of hours he is performing, right? So by labor law, by principle, doesn't recognize moonlighting, and employer is cast upon a duty that if he knows, then he should not make him overwork, and therefore there is an impact on the employee or worker. That's one. Second, with regards to the provisions on as Uday has very clearly alluded in his presentation, with regards to the gig and platform workers, yes, that's an interesting thought process which has been included in the Social Security Code, where they are being provided or at least a minimum of Social Security. Do they become workers? They don't. It is still, they are specific workers. They are called gig, they are called platform. There is specific definition unless otherwise the particular person fulfills that requirement. He will not be, he can be a normal worker for whom all benefits are, all protection under the code is required to be given, right? So that is, so with that, the next question I am being asked, and then you are also being asked normally, is that can I convert again all my employees and workers into a gig worker? I think what is a platform, who is a gig, who is a platform worker is all very clearly defined in Social Security, this thing. So you try to convert without any rationale and then call today more onwards Madhu Dhamodaran is a gig worker. I don't think courts are going to accept, even enforcement is not going to accept. So you're not going to go and tell a PF authority saying that no, since yesterday I've converted to a gig just like that, so I am going to contribute to him whatever is the fund being constituted for gig workers. I am stopping contributing to EPFO. I don't think that's going to be acceptable. So if you are, then that is part of preparation. If you know your particular set of your there is a business in which you are doing that is amenable to be performed by gig, and you can convert yourself into a platform, etc., then do that and convert them and have full justification and call them gig workers after that, is what I would say.
Yeah, thanks, Madhu. I think that answers very, very clearly. To all who are, thank you for being so patient enough and listening to all of us. I thank one and all to be who have been part of this session. I'm sure it's been a refresher for everybody. What we are going to do also is, as a quick follow-up, we are trying to get some extract of all the questions which are posed. I'm really sorry that some of them have not been answered, but what we can do, we have already created an FAQ document, and we will also beef that up with these additional questions which have come in right now, and we will see what best is the mode to share with you. Either your Allsec SPOC will share it with you directly, or we'll create it on our Allsec website and post it there. We'll figure that out early, but you will soon get more recent updates from our end. And most importantly, the Allsec Smart Snippets will continue. That should be your primary platform for us to read any updates on the recent changes. So my request is to keep on checking those alerts from our end. And that's it. Thank you so much. Thanks, Madhu, Uday, Vasant, Tutia, for arranging all of this. We will see whether how fast we can quickly reassemble. If there is any major change which is considerably impacting us, we will reassemble on a similar webinar, and hope to see you all soon. Thank you so much, and a very good evening to all.
Thank you. Thanks all.
Thanks to everybody.
Thanks for having us. Thanks.